Breaking news for home buyers. Mortgage rates have just seen their biggest drop in over a year, and there's been a dramatic shift in interest rates. Hi, I'm Steve Jolly from Home Buying Skills, and here's everything you need to know. According to a recent article from CNBC, mortgage rates saw their biggest one-week drop in over a year, causing the first increase in mortgage demand in a month. In fact, it was the largest drop in over a decade. According to Joel Kahn, Vice President and Deputy Chief Economist at the Mortgage Bankers Association, last week's decrease in rates was driven by the US Treasury's issuance update, the Fed striking a dovish tone in the November Open Market Committee meeting statement, and data indicating a slower job market. In other words, inflation is starting to come back under control, so the Federal Reserve can start taking their foot off the pedal of interest rate hikes. This led to modest increases in mortgage applications for both purchases and refinancing, but the drop in rates was not enough to get most people back in the market or offset high home prices driven by low demand. Now, the question that everyone is asking me, is this the beginning of rates coming back down? And at this point, it's impossible to know for sure, but this is one of the best signs we've seen in 2 years. And if the Feds believe they have inflation under control and we start to slide into a recession, as most analysts suggest, rates will have to come back down to stimulate the economy. Mark Lasry, a billionaire investor as the CEO of global investment firm Avenue Capital Group, was asked on CNBC's Closing Bell whether he thinks the U.S. economy will enter a recession next year. "I think we will," he said. A recession, remember, is just 2 down quarters. That's the only thing that's going to force the Fed to lower rates. Now, if you found this helpful, click on the like button to let us know you enjoyed it. Investor Rob Arnott also told CNBC, in any given year, the normal risk of recession or bear market is about 20%, he added. "I'd say for the coming year, it's about 50-50. Finally, Jeffrey Gundlach, CEO of the investment management firm DoubleLine Capital, said earlier this month on CNBC that he expects interest rates to fall next year as the U.S. enters a recession. Now, if you want a free report on your current home value, click on the link in the comments. If rates drop significantly in 2024, you will see a huge surge in home sales, mortgage refinance applications, and I expect first-time homebuyers will be going crazy again, and here's why. First, the demand for homes is currently higher than supply. However, over the last year, builders and bankers have been pulling back on new construction, which is going to cause problems in 24 and 25 because it's not easy to ramp up production of new homes quickly. It takes a few years of development work before the first foundation can be poured in a new neighborhood. While the rise in prices made homes less affordable, the biggest factor was the rise in interest rates. Rates have climbed 400 basis points since the end of 2022, and that alone resulted in the average home mortgage payment rising $1,000 more than it was just a few years ago. And it wasn't that long ago that the average mortgage payment for a first-time home buyer was around $1,000. And when rates get in the mid-5 range, the average payment will drop more than $500, and that'll be enough to get most first-time home buyers off the sidelines and into the market. If you have any questions, leave them in the comments below and I'll answer everyone. Now, if rates come down into the 5s or lower, I would expect us to get back to market conditions that somewhat resemble 2021, when many buyers faced stiff competition that led to multiple offers on homes, buyers skipping home inspections, a lack of concessions, special incentives, people waiving appraisals, and a fear of negotiating with the seller because you did not want to lose the home. I even saw home builders in 2021 refusing to repair certain items with the threat that they would just put the home back on the market and sell it to the next person as is for more money. Now, if you need a trusted agent anywhere in the country, click on the link in the comments. Now let's look at what all this could mean for the future of home buying and selling. There are other important factors that you need to understand that will affect the real estate market for the long term. First, millennials are the largest generation of people in American history. And prior to the pandemic, many held off buying a home because they wanted flexibility in their lifestyle. That changed dramatically in 2020, and now the majority of them are reaching prime home buying age. Fortune.com recently wrote that the numbers and their desire to buy a home is going to keep prices climbing for the next 5 or 10 years. Now do yourself a favor, hit the subscribe button, click on the bell so you never miss an episode. Second factor you need to know is the National Association of Realtors estimates that we are around 5 billion homes short of current demand. If you remember what I said earlier, Builders plan to cut production over the next year, and it takes a couple of years of development before you can start building the first home. Since we build less than 1 million homes a year in the US, it could take builders a decade or more to catch up with demand. Based on these factors, that the supply-demand imbalance is not going to go away anytime in the foreseeable future. We don't know what's going to happen in the future, but we know what has happened in the past. And the smartest folks use that information to make the best decisions for themselves going forward. What I recommend is that you buy a home as soon as you're ready. This will allow you to buy at the best possible price. And the price you pay is locked in forever, and that's why it's so important that you lock in as early as possible. Now, if you're worried about today's rates, many builders, homeowners, and lenders are offering special incentives to give you a break today. And I've seen buyers lower their rates by as much as 1%, 2%, or even more in this market. And the great thing about mortgages is that you can always refinance when rates drop. So you are not locked in forever on that high rate. So if you buy at today's prices and then refinance when rates drop in the near future, you'll be much further ahead than the folks who decide to wait for rates to drop and then get stuck with a higher price for the rest of their life. That's all for today's breaking news. Thanks for joining. Thank you for watching the video. If you liked the video, click on the like button to let us know you enjoyed it. If you have any questions, leave them in the comments below and I'll be sure to answer every one. Make sure you hit the subscribe button and click the bell so you never miss an episode.